Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now, there's a lot of turmoil in markets and it was led by weakness across equity markets in Asia and the US, with the core driver, of course, continue to be oil prices and the fears of oil supply disruption. Now, there's been a lot going on this morning, so let's recap what we thought were some of the key events. The US, of course, said it was discussing the possibility of banning Russian oil imports. This initially caused oil prices to surge further, with Brent oil rising as high as $139 per barrel intraday before falling back to close above $120. Now, this fall from intraday highs was led by reports that Germany was reluctant to participate in any such ban, with Chancellor Scholz saying he was reluctant to restrict trade of essential importance to Europe's economy. Meanwhile, Russia's Deputy Prime Minister Novak said there would be, quote, catastrophic consequences if bans on Russian oil exports were put in place. And he warned that Russia could consider closing the main gas pipeline to Germany if oil exports were targeted by the West. Now, equity markets, of course, bore the brunt of resulting market risk aversion. This started in Asia, where indices of key oil importing markets sold off sharply. So the Hang Seng was down 3.9%, Japan's Nikkei was down 2.9%, and India's Nifty fell 2.4%. Interesting, the sell-off in Europe was somewhat milder, but in the US, of course, the S&P was down almost 3%, and the Nasdaq a little bit more at 3.6%. Now, amid all this turmoil, a few key points do stand out to us, which we think can help investors navigate through this short-term volatility. So after yesterday's close, the S&P 500 was now about 12% lower from its most recent peak. Now, this context is important because this places it still well within the range of about 10 to 19% that we've seen during temporary pullbacks that occurred 6 times through over the 2008 to 2020 equity bull market. So important context there. The second is the energy sector. That actually still moved higher across most regional markets following oil prices. So the MSCI World Energy Index, for instance, rose 2.1% over the past one day. We continue to see the sector as preferred, and it could offer one way to ride out oil price-driven volatility, in addition, of course, to gold and commodity currencies like the Aussie. Now, from a near-term technical perspective, the outlook does appear soft for the S&P 500. Manish Jaradi, who's our team's technical analyst, says that the failure of the S&P 500 index to break past resistance on the downtrend line from the January high to Monday's closing low does raise the possibility of further near-term weakness. Now, any such move, of course, in his view, could initially push the S&P 500 towards the psychological 4,000 mark, which is about 4.8% below Monday's close. And any break below that, of course, could push the index all the way to 3,820, which is where there is more stronger technical support. But that's, of course, further at about 9% below Monday's close. So a few key technical levels to watch, but what we'd also keep an eye out for later this morning is that we'll be putting out a short note with a little bit more in yesterday's market turmoil and, of course, how investors could potentially navigate that. So please keep a watch out for that on our Standard Chartered website under Market Views on the Go. But with that, we'll take a pause there and I'll be back tomorrow with a little bit more on FX markets. Thanks again for listening. And as always, if you enjoyed this podcast, please don't forget to rate and like it, and we wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.